Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's the 1st of September 2023 and here are the questions we'll be answering today. What are OCCRP's allegations against Adani Group? Are Pratt Whitney engines pulling India's airlines down? Will El-Nino spell more trouble for agrochemical players? And what experiments will Vikram and Pragyan conduct on the moon? Over 7 months after the Hindenburg research report alleged stock manipulation by the Adani Group, a report released on August 31st went a step ahead and laid bare the alleged trail of money and the names of the people involved. And at the stock markets, it was almost a repeat of January 24th, as most group shares ended in the red. So what are the new allegations? Ragha Agarwal and Bhashwar Kumar scanned the report to bring you the answer.
Over 7 months ago, on the cold morning of January 24th, a 106-page report shook the mighty Adani empire. While the group scrambled for answers, its companies lost close to $12 billion in market value in the next few days. And even as the conglomerate was recovering from the blow, it has been stung by yet another report, which allegedly builds on the previous Hindenburg accusations. The August 31st report by Organized Crime and Corruption Reporting Project, or OCCRP, said that hundreds of millions of dollars were invested in the Adani Group stocks through opaque investment funds based in Mauritius. It said that in at least 2 cases, the investors turned out to be related to the Adani family, who are majority shareholders. In 2017, the stocks held by these 2 individuals were valued at a whopping $430 million. OCCRP is a global non-profit network of investigative journalists. The 2 individuals, Nasser Ali Shaban Ahli from UAE and Chang Chung Ling from Taiwan, spent years buying and selling Adani stock through offshore structures that obscured their involvement and made considerable profits in the process. These investors used 2 funds, Emerging India Focus Fund or EIFF and EM Resurgent Fund or EMRF, to trade large amounts of shares in 4 Adani companies between 2013 and 2018. These were Adani Power, Adani Enterprises, Adani Ports, and Adani Transmissions. Over the years, the stocks were bought at low prices and sold at much higher prices. Moreover, the money was channeled through 4 companies, which were either owned or controlled by Ahli or Chang. From these companies, money was sent to a large investment fund in Bermuda called the Global Opportunities Fund or GOF. Later, GOF subscribed to 2 funds, EIFF and EMRF. So, why is that a problem? The main reason why the share trade by these 2 individuals is a problem is that it allegedly breaches Indian law. According to the report, Ahli and Chang have long been related to the Adani Group companies, making them insiders and associated with the promoters. According to the Indian market rules, promoters of a listed company cannot own shares above 75%. In this case, with the stake of Ahli and Chang, the total promoter holding allegedly crosses this threshold. This, according to experts, is a way to create artificial scarcity and manipulate stock prices. If the relation is established, it will be a breach of law and would also corroborate the findings in the Hindenburg report. So, are Ahli and Chang related to Adani Group promoters? According to OCCRP, Ahli and Chang have served as directors and shareholders in Adani Group companies and companies associated with Vinod Adani. In a 2007 case filed by the Directorate of Revenue Intelligence or DRI, Chang has been described as the director of 3 Adani companies. Ahli's name has also been mentioned as related to a trading firm that was involved. In another 2014 case by DRI, Chang and Ahli have been mentioned as directors of 2 companies, which were later owned by Vinod Adani. In the Hindenburg report, Chang was also either a director or shareholder in a Singapore company that was listed as a related party in a disclosure by an Adani company. The latest findings revealed that Ali and Chang paid a Vinod Adani company to advise them on their investments. Vinod Adani has recently been acknowledged by the conglomerate as a promoter. So, the allegations point out that Chang and Ali were, in fact, linked with Vinod Adani, who has been named as a group promoter. If the links are established, it could mean that the conglomerate breached the 75% holding rule. On August 31st, the Adani Group issued a statement denying the allegations. It said the reports appear to be yet another concerted bid by Soros-funded interests, supported by a section of the foreign media to revive the meritless Hindenburg report. The OCCRP is funded by the likes of American billionaire George Soros and Rockefeller Brothers Fund. The group added these claims are based on closed cases from a decade ago, when the Directorate of Revenue Intelligence probed allegations of over-invoicing, transfer of funds abroad, related party transactions, and investments through FPIs. It added that an independent adjudicating authority and an appellate tribunal had both confirmed that there was no overvaluation and that the transactions were in accordance with applicable law. The group also said that the matter attained finality in March 2023 when the Supreme Court ruled in its favor. So, is there anything new in the report by OCCRP? And what are the allegations made in the new report?
So firstly, is these set of allegations completely new? No, it is not any completely new set of allegations. It is the same sort of allegations or same sort of reports that Hindenburg sort of summarized, collating from various sources. The large allegations are three in number. One is this over-invoicing of exports, imports into the country. So from that perspective, sending more money outside of India to foreign jurisdictions, and from using that money to invest through shell companies into Adani Group shares itself and trading in Adani Group shares and inflating, or rather buying and selling and transacting in Adani Group shares and raising the stock prices of Adani Group companies. And that is where the second allegation is that of violating the minimum public shareholding. Because Adani, in many Adani Group companies, the promoter already owns a 75% shareholding. So these entities, if they are taken to comprise or to make up, to be related to the promoter, that means that they would have violated the MPS securities regulation. That is the second allegation. The third allegation is that this is insider trading and there was round-tripping of funds into the country.
After the Hindenburg report came out, the Supreme Court formed an expert committee to look into the matter. It also directed SEBI to conduct an inquiry and see if there was any violation of the related party or minimum shareholding rules. On May 19th, the 6-member expert committee told the Apex Court that SEBI has drawn a blank in its investigation into alleged violations in money flows from offshore companies. Last week, SEBI told the Apex Court that it had completed the probe in all but 2 allegations against the Adani Group and is still awaiting information from 5 tax havens on actual owners behind foreign investors investing in the conglomerate. It also submitted its status report to the Apex Court. The hearing on it is expected to take place soon. So, will the new OCCRP report have any impact on these proceedings?
Whether these OCCRP will influence SEBI or Supreme Court, I don't think so. I don't think it will influence those investigations per se.
At the bourses, shares of 9 out of 10 Adani Group companies settled in the negative zone. The likes of Adani Energy Solutions, Adani Power, Adani Enterprises, Adani Ports, and Adani Wilmar tumbled up to 5% on the BSE in August 31st's intraday, before settling lower in the range of 2 to 4.3%. Despite this, the expert we spoke to indicated that the new OCCRP report doesn't appear to be a Hindenburg 2.0. However, it does highlight the fact that the allegations against the group are yet to be settled to the point where it can go back to business as usual.
Like the Adani Group, some Indian airlines too are going through turbulence. While they have come out from pandemic-led slowdown, ratcheting up operations is becoming difficult for them. A large number of aircraft are either grounded or going through inspections, and most of them are facing issues with Pratt and Whitney engines. So are Pratt and Whitney engines pulling India's airlines down? Kasturi Akhil and Ashutosh Mishra find out.
Two Indigo aircrafts had to make emergency landing earlier this week after one of their engines stopped working mid-air. While one could make it to its destination Mumbai, the other aircraft had to make a U-turn shortly after it took off from Kolkata airport. Both the aircrafts landed safely and joined a fleet of Indigo planes that have been grounded so far because of engine-related issues. The two aircrafts, like many others in Indigo's fleet, were using the same Pratt and Whitney engines that were at the center of controversy for some time. Pratt and Whitney is among the top 3 aircraft engine manufacturers in the world. Of late, it has been in the news for complaints of faulty engines from both aircraft manufacturers and the airlines. India's biggest commercial airline, Indigo, has already grounded around 33 planes because of pending maintenance and shortage of spare parts from P&W. So, how is this impacting the Indian aviation sector?
Who bears the brunt of this is folks like you and me, the traveling public, the consumer. Today in India, we have almost 120 aircraft grounded because of Pratt & Whitney, and that's a concern. This has got to do with an India versus Pratt & Whitney, because when the consumer suffers, when tickets from a Delhi-Bombay ticket, which used to sell for 6,000 rupees, now sells at 60,000 rupees, where do you want people to go? And it's us as the Indian citizen who's being pained by it.
Earlier this year, Go First also blamed faulty Pratt & Whitney engines for its bankruptcy. It alleged that because there was no supply of engines from Pratt & Whitney, the company was forced to ground around half of its airplanes, which led to huge revenue losses. Responding to Go First, Pratt & Whitney said the airline has had a long history of missing its financial obligations towards the US engine maker and dismissed the claims. The latest engine failure was attributed to a contamination of the metal used in the manufacturing of the engine. Pratt & Whitney's parent company, RTX Corporation, said it is aware of the engine snags and will revoke the faulty engines for inspection from airplanes across the globe. Complaints around Pratt & Whitney engines aren't a recent development, as both Indigo and Go First have been experiencing engine snags for the past few years.
So there are two issues. The previous issue that has been going on since 2018-19, related to main gearbox, related to low pressure turbine, and related to vibration, and the recent one which happened just now in July itself. Now this issue is related to possible microscopic cracks that have developed due to the metal that they have used in developing high pressure turbine discs of engines.
Back in 2019, the Indian Civil Aviation Regulator had ordered the two airlines to take stock of some of the Pratt & Whitney engine-powered aircrafts that were facing in-flight shutdowns. So is there a way to resolve this?
We need to have aggressive, radical steps on the table. The government needs to step in, hold Pratt & Whitney accountable, bring them over to India and question them about this and tell them that, and make it clear to Pratt & Whitney that our airline industry, our aviation industry is suffering because of you, and you need to find a solution or take these engines back, give us brand new engines or give us some other engine and pay for the retrofit.
The grounding of more than 50 aircraft has also stoked concerns around the dearth of parking space at the Delhi airport in light of the upcoming two-day G20 event in the national capital. Industry experts contend that the only solution is a complete replacement of the defective engines. For now, it is not only the airlines but also the consumers who are bearing the brunt of flight shutdowns.
Air travel penetration in India is still very low at only 0.1 trips per capita compared to 0.5 trips per capita in China. Moving on, shares of agrochemical companies have skid up to 34% so far this year amid high inventory and adverse weather conditions. With the occurrence of El-Nino like weather conditions last month, is the sector set for tough times ahead? How should investors navigate the agrochemical space during these turbulent times? Lobish Adarar explores in this next segment.
Shares of agrochemical players have underperformed benchmark indices so far this year. On a year-to-date basis, related stocks Bayer Crop Science, Rallis India, Insecticides India, and Sharda Crop Chem have fallen in the range of 2 to 34% as against 7% rise in the Sensex and Nifty 50 benchmarks. The subdued performance, analysts said, was driven by adverse weather conditions, sluggish global demand, and substantial stock dumping from China at lower prices, which led to piling up of inventories.
Since the middle of 2022, agriculture input sector has been confronting the issue of excessive high-valued inventory. The pace of reduction of this inventory has reduced due to global demand slowdown. The re-entry of Chinese players further worsened the existing challenges, offering increased supplies at lower prices. Pressures would persist until global demand rebounds, clearing high-value inventory and domestic concerns about El-Nino diminishes, affecting the near-term outlook.
For the April-June quarter of fiscal year 2023-24, aggregate revenue of agrochemical space declined 12.6% on an annual basis, with a 56% fall in aggregate profit after tax. Monsoon rains and kharif crop prices are crucial factors for the agrochemical industry because any delay in sowing activity could lead to inventory buildup, impacting margins. According to latest report, rainfall in India was below 32% long period average in August, as against 13% surplus rainfall in July. Analysts expect trouble for the sector to continue due to prevalence of El-Nino-linked weather activity.
During the month of July, due to better rainfall in the domestic market, there has been a good amount of liquidation and industry posting a 20% sort of like growth. So this has been like confirmed by our channels checks also. So the channel has also opined the same thing. However, during the last fortnight, the rainfall activity into the pan-India basis, that was on the lower side, which in turn has resulted into some slowing down of the momentum of the sales momentum which was witnessed during the month of July.
That said, how should investors approach this sector?
If at all there is a recovery, that would be witnessed during the second half. So one has to like keenly watch on how things evolve or unfold going forward before taking a call on the overall global agrochemical space. So from the current standpoint, we continue to like the domestic players over the exporters, and PI Industries remains our preferred picks into the agrochemical space.
Analysts advise investors to remain cautious on the overall sector in the near term and invest once there is visible recovery. On Friday, September 1, markets will react to India's Q1 GDP data, August auto sales figures, and PMI data.
He's making plans for an early retirement. Business Standard.
Stocks of 4 firms involved in the moon mission reportedly added about 2,000 crore rupees in market cap last week. Meanwhile, a week after landing, the pictures of Vikram lander were released by ISRO. The two components of the mission, the Vikram lander and Pragyan rover, are busy carrying out scientific experiments on the lunar soil. Ashutosh Mishra tells more about the adventures.
There are 3 parts to the Chandrayaan-3 mission: a lander module, a propulsion module, and a rover. Vikram and Pragyan are the components of the lander module. Vikram lander, named after eminent scientist Vikram Sarabhai, was primarily tasked with soft landing on the moon and then deploying the Pragyan rover. It has already achieved this feat. Now, post-deployment, both Vikram and Pragyan are performing experiments on the surface of the moon with the help of specialized payloads attached to them. Vikram lander is tasked with 4 broad objectives. 3 objectives involve measuring the near-surface plasma density and its changes with time, thermal properties of lunar surface near polar region, seismicity around the landing site, and delineating the structure of the lunar crust and mantle. All these will be performed using different payloads and instruments present on the lander. The 4th objective is to carry out a passive experiment to understand the dynamics of the moon system. According to recent updates, Vikram lander has already measured the temperature profile of the lunar topsoil around the pole using the Chandra's surface thermophysical experiment payload. The temperature readings have been recorded as high as 70 degrees Celsius. Pragyan rover is tasked to carry out chemical analysis of the lunar surface. The rover has 2 payloads. They are laser-induced breakdown spectroscopy or LIBS and alpha particles X-ray spectrometer or APXS. LIBS will perform qualitative and quantitative elemental analysis and will also look at the chemical composition and mineralogical composition of the lunar surface.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Pragyan, meanwhile, has found traces of sulfur on the lunar surface. Scientists believe it can be used by future moon dwellers for building materials, solar cells, and batteries. Well, that's all for today. Catch the next episode of the morning show tomorrow. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.